Okay, so it's Friday, October the 9th. A couple things I wanted to comment on. I think I'm getting a little gun shy on Fridays. It seems like every time Friday after 3 o'clock rolls around lately, something's been happening. We lost a Supreme Court justice, and then the president got COVID, and so Friday's kind of become an exciting day. We have 4 weeks of the election. A lot could happen. A lot's going on. We'll have to ride through that. Now, the interesting part about the market is that we closed yesterday at 28,425. We were up 122 points. Our 2020 high, we reached that on February the 12th, and we were at 29,551. So we're only about 1,000 points off of the high, which really isn't that bad. We're down about 2%. So considering what kind of year it's been, that actually is a pretty good number. Our high on September 2nd is the high since COVID started. And on September 2nd, we actually hit 29,100. So we were really close to getting to where we started the year. Our COVID low was on March 23rd, where we dropped down to 18,591. So to keep that in perspective, from March 23rd at 18,591 to yesterday, climbing all the way up to 28,425, that's 10,000 points off of 18,591. That's an incredible recovery. We're going to talk about a K recovery in a second. I made kind of a chart. We talked about it some last week. I made a chart to show it a little bit better this week. So there's relatively good news. We'll talk about unemployment in a second. That was a little bit higher than we expected this week. The number came out yesterday, but it wasn't terrible. I mean, within range, things we can work with. So let's go ahead and look at our Dow Jones chart where we start our week usually. And that shows us that over the last couple of weeks, we had seen some flat points. And now we're starting to see, if we can get this over here, we're starting to see a little bit of a rise that's come up in the last couple of weeks. Now you can still see that, you got the blue line as the daily movement, and then you've got the orange line as the 7-day moving average, and then the silver is 14-day moving average. So you still see that 14-day moving average kind of flat, but 2 out of 3 are going up. The daily movement's going up, and the 7-day moving average is going up. Those are nice trends to see. One of the things I wanted to point out was that we recently, within the last couple of days, got to the point where our average daily movement, which means that's where I calculate the movement on the Dow, and I go all the way back. I go back years and years and years, but if I go back to January 1st, our average daily movement is down only about it's actually up 6.4 points per day. Now that's almost an insignificant number, but when you start stacking those on top of each other, they start building. So it's good that our average daily movement has actually moved into the positive territory. There for quite a while it was negative. And you're starting to see that in this chart. You're starting to see some things slide up. Now I'll stand by what I've said before. The next couple of weeks could be very volatile. I don't like to see 3-digit moves, but yesterday we were up 122 points. We had some up threes, down threes, and we're starting to see some of that volatility. People are paying a lot of attention to the market, and they're really, really focusing on individual things and reacting to those. And so look for this chart to get a little more volatile over the next couple of weeks. And then we'll have some more insight on when we'll actually see who's won the election. I doubt if we see anything on that until probably mid-November, maybe Thanksgiving. So we'll see how it goes. And so on the next chart, this is our unemployment number. As I said when I started, the problem was we expected the unemployment number, we expected to be down a little bit further than it was. We went down, we were at 846. We were kind of hoping for 840, somewhere in there. We also adjusted the previous week's unemployment. Unfortunately, we adjusted that up. And with any of these numbers, that's kind of what happens. We get our preliminary number, and then 7 days later, we make an adjustment. We may make an adjustment 14 days later. That's true in unemployment claims. It's true in housing starts. It's true in all those things. So we're a little bit disappointed that the number was a little bit higher than we expected. But again, you're talking about it being 846 versus 840. Percentage-wise, that's not really a big number. And then, as I've said before, the travel and leisure, the impact that could make, I think will be offset by the impact in retail. At least I hope so. And depending on whether Congress gets a bill through to bail out the airlines, that will be a big thing, because you've got probably 65,000 people there alone. And we'll see how that rides out. So right now you can still see a little bit of going down on that chart. It's not going down heavily, but it is going down. And this big bump you see back here in March, this is like, I think I talked about this before. If you have straight A's in school and you make an F, it takes forever to recover from that F. Well, that big bump is like our F. It's not a good grade. So it's going to take a lot of work to get that average line moving down. And we'll see that I hope, over the next couple of weeks and on into the year. Our unemployment now is below 8%, which is good. We'd like to see it below 5, but it is going down. We're at 7.9, and it's continuing to decrease. As I talked about before, the FOMC is projecting that unemployment number will be down in the area of 5 to 6 into 2021. Seems like a long way away, but 2021 is going to be here in the blink of an eye. So those are good numbers. This is not a bad chart. It's not great. This is our sector chart, and I'm going to go into this to talk about the K recovery that they talked about. And this shows that you can see I've separated this into pre-COVID and post-COVID. And you can see where basic materials was just cruising along, and it's been flat ever since. And you can see oil and gas really got hit hard at the beginning of the year. And my other thing is information technology, which is down there almost at the bottom. It had a difficult time, but the least difficult time of all sectors, January to 324. So remember, most of this downside occurred after February the 20th. But look what technology has done since. It's just made an incredible recovery. And so now it shows it up 31.6% on the year. So let's go to that K chart, Mallory, and which I think is next. And so they refer to K charts. This is not as perfect as I'd like it to be, because it's going to take a lot of time to create one like I want. But what it shows is rates of recovery for the different sectors. You got to remember, we have quite a few sectors to deal with. So they all recovered and go down at different rates. So kind of imagine this chart turned on its side, and you can envision that K that they're talking about, where you have some sectors are going up faster than others, some sectors aren't recovering as fast, and that indeed is something we see on every economic recovery. It's just a matter of what sectors or what industries are going to recover slower. Typically, we've had a little over 50 recessions in the last 110 years. And of those, financials almost always lead the way. Sometimes they don't. In 2008, they didn't. A lot of times you have basic materials lead the way. What's changed is information technology. Information technology is the modern day industrial revolution. I'm always reminded of Ben Franklin making the statement that the patent office could be closed because everything that has been invented has been invented. And that was a long, long time ago. And so now you see information technology is our industrial revolution and what it's done. So it's recovered extremely nicely, but it's still considered a pretty volatile sector. So we have to be careful where we are. But back to the K point, you can see where these sectors are recovering at different rates. They will do that. It's going to happen. And then again, we'll see, basic materials will pop up in October. I expect October, November. Information technology will probably continue on a soft growth pattern. Some of the others are, have some problematic, but there are things in there that we always have to have. Companies that provide us basic materials that we need every day, toothpaste, the ever popular toilet paper. And those industries are going to grow quietly, but solidly upwards. So that's your K recovery and the things that the folks are worried about. I don't want to get into the socio issue because it does have some social impact based on who is hired in which industry. But remember, in building materials, industrials, and housing, that's a lot of skilled labor. A lot of jobs will be had in October, November. And so that's a positive thing. Some of our favorite stocks are from some of those industries, basic materials, information technology. We're cautious on medical supplies and healthcare. That's a sector we worry about. We're not sure which direction it's going to go. But we have some of our investments in pretty much every sector. We weight them. We have a little bit more right now in information technology than anybody, and we have a little bit less in real estate than everybody. So that's kind of how we balance what we do. That's our week. This week, it is getting exciting as we get closer to see what happens. Whether we have a second and third debate or not is problematic right now. We still have some things to work through voting online or voting and by mail, whichever works out. So pay attention to what's going on. Invite your friends and family to watch us. This is we try to be non-political, non-commercial, and call us with any questions. So again, let's watch out. Oh, I want to talk about the world economy. The chart I didn't have time to get to Mallory last night was on world indices. All of those were up for the week, which was great to see. We had all green bars all the way down, and that's great. Even in the Belgium, which is pretty much commodities, that even showed green bars. So that was great. It was good to see that. And once again, the United States indices we are leading the way again with our Nasdaq. And remember, Nasdaq is weighted heavily in information technology. Nasdaq is ahead of everybody. Right now, it's up about 15% for the year. So that is the week ending October the 9th. We have a holiday on Monday. We won't be in the office. I will be in the office. The market's open. The banks are closed. And then next Friday, we'll be back. We have a couple of Fridays coming up over the rest of the year where we won't be here. So you can mark your calendars, or we won't be here the day after Thanksgiving. And then Christmas and New Year's happens to fall on Fridays. And other than that, we hope to bring you some good information. So a little bit short today. Hope everybody has a wonderful week. Enjoy the weather and enjoy your holidays, those of you that have a holiday. And we'll see you again 1 week from today. Remember, if you have any questions, give us a call at 913-259-2110 or send me an email, mmccauley@firstoptionbank.com. Thanks again to Mallory, who does an awesome job putting this together and keeping me on track. Couldn't do it without her. She's really awesome. I appreciate that. Everybody have a great week, and thanks for joining us.